Guys, buckle in because shabba dabba ding dong, we're about to freaking give you the most in-depth TA video that I have done for some time. I spent quite a bit of time trying to find some recognizable patterns in AMC that we can potentially take to predict some future price action, not microscopically, but macroscopically, right? I look back from January until June, what happened in between then to get us to that large move, and then I look from June until now, and I think I've got a pretty good idea if we were to follow very similar trends, which we have so far actually, to get us to the next promised land. But before we get into that, what is up everybody? I'm Trey's Trades, we freaking talk fast and don't skip class. I'm gonna preface by saying that I'm not a financial advisor or expert, so take what I say with a grain of salt. Let's get into the meat and potatoes with gravy, because here at freaking Trey's Kitchen, we like that gravy on our roast beef sandwiches. So today, my friends, I want to give you no price targets, no dates, just pure pattern and trend, what I think you could see based on some previous action that's happened on AMC. And I've got things color coded appropriately so that you can see exactly what I'm talking about. Keep in mind a couple things, right? This does not mean it's going to meet to an exact dollar these levels that I've dictated, as you will see by the overall trend, and it does not give you a time frame, it does not give you a price target, right? None of this is to be taken in any sort of literal way as to the exact penny. It's a generalized trend, right? It's an estimate on what I think you could see based on what's been happening here on the chart. So let's go back in time. Let's look at AMC stock between December, early January to the first decent sized run up, right? What did you see? Well, first off, you got a freaking, what I like to call Hulk Dick sort of move from $1.91 all the way up to $25.80, but I'm excluding the candle wicks. I want to take the meat of the move. I want to take the actual what you consider the sandwich and not the freaking sesame seeds on top of the bun, right? And what do you have here? $1.91 up to about $20 and some change, $19.93. And the Fibonacci retracement is what is labeled in white. A Fibonacci retracement just gives you ideas of levels that you can see a stock pull back to based on the meat of a move, right? From the bottom of a run-up to the top of a run-up. And the red trend lines right here are a wedge formation. So if I was to get rid of this Fibonacci retracement, what do you see here in red, excluding this 1450 level, is a downside level of resistance, right? You got at least 3 touch points, which is what I would use to consider any significant level of support or resistance. You get 1 touch point here, 1 touch point here, touch point here, touch point here, and then a break of that overall level to ultimately bring us up to the next big parabolic move, right? You got this huge wedge formation and a break of that overall wedge. Well, you also have retracements, right? And that is these green trend lines bouncing off of the Fibonacci retracement. And I like to call this an ABCDE pattern. And you have that sort of playing out here on a very large scale time frame between January, the initial run up, until June, the next parabolic run up, right? Now, what do you got here? Well, 100% down here is the beginning of the move. 0% is the top of the move. So if you had, for example, a 78.6% retracement, it means that you're giving back 78.6% of the move from $1.91 up to $19.96 or so, right? So you get that right here. It pulls back from 0% down to about 78.6, which is $5.90. So it's essentially, to put it very simply, a pullback, right? It's just a percentage of the top of a move. Now you get this A pattern right here. This is what I would call the A pattern, the beginning of the ABCDE at this first trend line. A. Second trend line right here would be that B move. C. What do you have next? This is a long, sort of exaggerated move up to what I would call this 38.2% retracement level. And you're going to see that come to pretty high importance as we move into where we currently are sitting in terms of overall trend. You also get a test of that 1450 level, which is labeled right here in red. This is very important because when I said way back in freaking May, I said 1450 and it's done, and that was the pivotal level, very similar to what I'm about to show you next. Now, after this 38.2% retracement, right, as I said, it's an overall trend. It's not going to bounce exactly off those levels, but it does meet right here somewhere in the middle. It bounces back down once again, and where does it come back down to? The 61.8% retracement, until ultimately setting the next all-time high for the stock, which was that $77 level. For the same sort of setup right here, I took the meat of the move. Now, what's the most important part of this trend, right? Why do I want to point this out to you in terms of a macroscopic look at AMC stock? Well, if you look at this right now, what you can can see is there's an A, B, C, D, E pattern. A, B, C, D, E. A being the big move and E being the next big move, leading into the A of the next overall pattern, right? And you also have a wedge breakout. And that happens at a very similar time frame to when this E beginning of the pattern starts. Now, this doesn't mean that right when it breaks that wedge, you're going to see this parabolic move, because that did take some time, right? You got the break of the wedge, and then it did take, about a week and a half, 2 weeks until you really started seeing some accelerated growth. Now, what's probably the most important thing, if you look at this on a daily candle setup, well, you can see that once you broke that wedge, the volume actually was not that high. It was decently low. And what does that mean? It means that days to cover, which is an estimate comparing the overall volume of a stock compared to the short interest. It takes a calculated percentage of that, a ratio you could say, and it gives you an idea of how hard it's going to be for shorts to cover positions. You have low volume on the break of that overall wedge, meaning there's not a lot of turnover. People aren't exchanging hands. No one wants to trade lemon pepper tendies for lemon pepper tendies. That does not make any sense because they're both freaking lemon pepper tendies, right? They're just holding their shit. They're holding their stock because they know this thing is gonna do its thing. And you are seeing very similar situations to that right now. So looking at this chart right now, what do we have? Couple different things. A, B, C, D, E pattern. You're getting that nice retracement off the Fibonacci. You have the break of this very large scale macroscopic wedge, and you have low volume on the break of that wedge. Now, keep that in mind. What do you have from the move of $25 at 0% up to this move right here? That comes out to a 2.62 times multiplier, bringing you about a 200 and some change percentage run from that $25 level, right? So now we're going to come to the present day. What do you have playing out right now? Well, remember what I talked about with this Fibonacci retracement sort of bounce, right? You're getting the very same sort of setups. You have this move right here up to 0%, the A pattern, down to 78.6, up to 38.2, down to 61.8, and then the next big move. Well, now I've got that drawn out once again. You have the 0% move right here, comes down close to 78.6. As I'd mentioned, this is an overall trend. It's not exact pennies, it's not exact dollars, but you can see what I'm talking about here. You come up to right here, 23.6, come down to 61.8, as you can see right here. And next, what do you expect? The next decent sized move. And you're following the exact same pattern with that wedge breakout as well. And the most significant information, guys, is that the volume is low. And what does that mean? It means there's not shares trading hands. It means people are sitting on positions waiting for the next decent sized move to come. And what could be happening here, right? Why would you see this break out of the wedge despite the fact that there's not hands trading the stock right now? Well, you have call options that could be potentially running in the money. You could have some shorts, obviously not all causing a short squeeze, but some shorts getting out of their positions, similar to iceberg lettuce capital apparently, that start to slowly push this thing up, right? It's like taking the stairs to the Kraken Kingdom, and then once you get up a couple stairs, then you've got the elevator that runs at 100 million miles an hour, giving you freaking G-force takeoff out of the freaking doorway, right? You have that sort of move starting to happen right now, and it's just the beginning of that move. Now, what is different this time compared to last time is this false breakout. You didn't get this false breakout out of the wedge back here in this this January to June time frame, but you do have that overall break. You can maybe consider this a false breakout in terms of that overall move, which does line up pretty decently well with that D part of that retracement pattern, right? So I do think you are getting somewhat close. I'm not going to say tomorrow. I'm not going to say a week. I'm not even going to say maybe 2 weeks, right? But I do think you're getting into that next part of this pattern, the E pattern. You have this break out of the wedge, and if it continues for the next couple of days, that is going to be the absolute confirmation that I want to see, right? To see that this is going to do what I think it's going to do. But this is what's beautiful, guys. If it was to follow, and there's actually more strength in this overall run up right here, right? It didn't retrace nearly as hard. It didn't come all the way down to that 78.6. It held on to these levels for much, much longer. People are holding their stock. The apes are holding their freaking stock, guys. They're waiting for this next decent sized move. So if it was to follow the same sort of trend, that 2.62 times multiplier, what would that bring you to? Well, I've done the liberty of drawing out the Fibonacci retracement for you guys. That'd be right here. $173.53 would be that 200 261.8% retracement. Same exact thing as we saw from the January to June run up, right? Just based purely on trend and pattern. Now, guys, you can do this for yourselves. You can drop the charts, you can drop the wedge, you can drop the Fibonacci retracements, you can drop that blah, 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 and come to these same conclusions. But macroscopically speaking, don't look at the day-to-day bullshit. Don't look at the freaking minute price candles. I made that mistake. You're going to obsess over it. I'm telling you, set some price alerts, set it and forget it, because I think, and this is about the closest I'm going to come to giving you guys a time frame, sometime in the next month, right? I'd say between 2 and 4 weeks, possibly 5 weeks, you're going to see the next part of this ABCDE pattern, the E right here, start to come to fruition, because you're watching the exact same trend play out damn near picture perfect. The only sort of part that isn't picture perfect is it's actually stronger. It's not coming exactly down to that 78.6% retracement level. It's holding itself much better than it has prior in the past. Patience. If there's anything to be told about what's happening right now, volume's low, which means there's no turnover, which means people are holding their stock, and this is following a pattern. Whether you agree with technical analysis or not, my friends, right? This is in front of your eyes. You can see it. You can see the priced in the priced in stuff happening right now, following the exact same generalized trend. And right, there's going to be times when it's above and it's below, it's above, it's below, right? You can see that back here as well. It's above, it's below, it's above, it's below, it's above, it's below. It goes back and forth. But the trend is what I'm paying attention to macroscopically. I think if you want to see the next size move, it's coming, and it's coming soon. Like I said, that's about as much as I can say, and I suppose that's what I got for you. So I put on a hat today because my hair is getting too long. I need a haircut, and I didn't go in this weekend. But blah blah blah. I know you should drop a like, consider subscribing, everything, my friends. I also finally set up a PO box. The description is shit. The address is going to be in the description box down below if you want to check that out. But nonetheless, much love to everybody. Catch you on the next one. Light taps always, and peace.